panic here for that to happen. What I will say is the big dog. So how we start is how we end. So if you want to take one thing from this video, and by the way, if you're trying to get in the community, please check your email because there's 24 hours left of the last batch that went out for a wait list. And then the community will not be open until sometime in September because I do all the onboarding calls myself. So please just check that. And if you're trying to get on the wait list, link in description. And if I remember, I pin it. All right, let's go. Here's the thing about this. We started with what? When Micron peaked. Earnings, peak, that's it. And then you had the window dressing and everybody wanted to say they own these names and then they got kiboshed. You're hitting the 55 and rejecting. You're hitting the 55 and rejecting. You've hit, say it with me, the 55 and rejecting. The 12 and the 22 are coming down. That's it. You can put lipstick on a pig all you want, it's still a pig. So we have to be really cognizant of this, right? So when we look at it, we're not like looking at this and we're not like shocked that this is what it's doing. Like it's not really that shocking, right? That when we come to this level, let's get rid of that, whatever, we don't need it anymore. That we've come to this level and that we're rejecting that level over and over again. Like it's not a shock. So this is something that I would like to see us push through. But if you, again, look at the timing of it, like here's 1 o'clock and we hit it and we rolled. Here you are right around Monday at 12:30 and we rolled. So I want to be really cognizant of that. I don't think it's great to close it low of the day, but considering the amount of concern over what's going on in South Korea, I just think everyone's looking at this like they did with the NQ and saying, yeah, whatever. I don't want the risk until I can find out what's going on over there. And that's exactly what we saw. And today, it was just like, just get me out. I'll come in tomorrow fresh. And that's really where I think their head is. So if you look at Micron, do we have something here that's structurally broken? I wouldn't go that far, but I would say that you definitely have weight on you. You definitely have weight up here that's on you. You have an 800 ball that you bounce off like a cat in a hot tin roof, and now you're fighting with the 850 level. So you're going to want to watch that very clearly. If you're going to take a look at SanDisk, 1390, there's just more negative gamma at 1390 than like anywhere, like ever. And what's crazy about it, you can actually see it on the chart. Every time you hit it, bonk, that's the noise. So what do you do about it? Well, you let it go. And you just let it go and you let it solve itself. I actually did go net long via puts today, selling puts, because they're so expensive. It's like crazy to not sell them if you want to be long the stock. The reason I got out of them, because I don't want the overnight risk, and I had zero follow through, like literally zero follow through. And it's an issue, again, that I think you have to pay really close attention to. You came right up here, it looked like you were going to go, and I gave it an hour, and then I'm like, all right, well, so much for that. And my thought was that we'd at least push back to this level, and if you take a look at that level right here, you'll see this huge divergence when that happened on Friday. It was like perfect place to think about putting on a short right in there, but you know, it's crazy how those divergences work, isn't it? So where does this leave us? Well, this is what's interesting to me to start here before we get into two things that you really want to pay attention to. I think we'll cover three. But the first thing for me in looking at this entire area on the 4 hours, I'm not in any hurry. There's no extreme panic here. Now, the extreme panic, you can take a look at yourself and like, well, what are you talking about? Well, I'll show you this. So if you go take a look at DMI, and what we'll do is we'll get rid of RSI for a second, and then we'll get rid of the ADX line. So the orange is negative, blue is positive. Orange is negative, blue is positive. You can see where it flips on the 4 hour, right? It just follows that trend. I'm actually trending down on negative pressure.
It was harder than your claim was.
Also trending down. So if you go and take a look at this historically, and you look at the lowest negative positive pressure that you've had since this whole thing has started, you have to go all the way back. This is really it, and it gets you to like an 11, and you're right around something like a 15 or a 16. So that's an extreme level of people just puking it out. And what that did was take me back to a breakout of earnings. So just stay with me 1 second so you can understand where I'm going with this. So negative, nobody wants to be in it, no positive directional movement in the name whatsoever. That's what these two lines chart. It's not objective, that's literally what they're charting. Or it's not subjective.
I knew it.
So it came back to what earnings,
Saw that one coming.
So if you're going to follow that, which I hope they don't, but if you were going to follow that, you come back to what? Earnings, which was around that 1,000 level, and it would do the same exact thing.
Swept in there,
thank you very much. I do like the fact that the negative volume is so negative here that you're at an extreme. So again, if you go and take a look here, those extreme levels, they're pretty rare. It's almost hard to even use this because of where the stock was, but that is an extreme level. And so you're starting to see them work that off. If you came here on the hourly, you can see they're trying, and then it comes back down. But the negative pressure here of this move is leading me to believe that you're getting so overdone. And so we're just going to watch it. But from my standpoint, 1390 and the way that that's holding, clean this off, that you have a shot here. You have a real shot to hold that level. And of course, you have to deal with Google and AMD tomorrow, right? And the first one you're going to have to deal with is going to be what? You're going to have to deal with AMD. Now, AMD was a classic example of a name that held. So you came to your 55, ran up, pulled back today, and exploded to the upside this morning where everybody, you know, oh, we got to get in, we got to get in. It lasted 15 minutes, and then that was the end of it. And then if you candidly look at the opening price, and I would strongly suggest that you guys do yourself a favor. I've done 3 or 4 times on this chart already in this video. You should be marking off your opens. If you're in the market and you have sellers and you have selling pressure, which you have, if you have a 55-day moving average, which you are on the NASDAQ, you always want to look at the opening price to see, do I still have sellers? And if you watch what's happening, you have sellers all day long. And by the end of the day, they had enough, and they got out. Now, going into this advanced AI meeting, it better be fantastic. It better be the best meeting they ever had. Because if it's not, then you're going to see semis come in. And it seems to me that people don't even really want to play with it. Seems to me they bought it on Friday, really great buy on Friday, coming into the weekend, and now they're just like, you know what, get me out of this because the way the market is. And that's going to take me to a couple things that I'm noticing on the way the market's acting. The first one is USO. If you start getting over this on crude oil on that 55, you're going to have to watch that because I think that's going to be an issue. You can always just watch crude, but if you flip the 55 here on crude, you're going to have an issue. You're going to see a lot of people start coming into that trade. You want to just look at those longer term moves. So if I get rid of this for a moment, drop it here like it's hot, come over, and you break the 55 to the upside, what happens? You get a whole new trend up. You break the 55 to the downside, what happens? You get a whole new trend down. So you want to watch this. There's nothing cleaner than trading commodities with long-term trends by just looking at institutional levels. I mean, it's pretty darn clear what's going on. That's why they're so important when you look at like the NQ and you see like the NQ break, and you have to stick with that trend. There's the trend up, there's the trend down. You look at the ES, right? And the ES always is with us. ES always leads, but you know you're sitting right on it, so you don't really want to start closing under it because it is very definitively a trend, and you don't really want to play with it. You want to really watch that kind of thing. To get back to crude, it does not seem like this is ending anytime soon. And quite frankly, you started to see that in the refiner names, and you're seeing the refiners just continually hit new highs. I don't know how this ends, but considering how it escalated, it is not the U.S. that's trying to mediate anymore. It is not Iran. It is their neighbors that are trying to mediate, and it doesn't seem to be going very well. No side really wants to mediate at this point. And I think it is what it is at this point. So I think that this is something that's weighing on us a little bit longer than we think. One thing that I would say is that if I look at UFO, and I want to cover this because this was really interesting today. So you have SpaceX that everyone and their sister got shoved down their throats. So they have it in UFO, you have it in Jedi, right? You have it in all this stuff. Here it is. I don't want that. I want this. You have it in Jedi, right? You have it in the NASDAQ now. It's everywhere. We're infested with it. So like the issue there is that, okay, we're infested with it. So now we got to find out what the real level is. Once we broke that level, we never came back. Like it never came back to that area, right? That was it. It broke 150. And ever since then, all you've done is you've just been cascading down. And you can just say that, you know, it's falling off a cliff. I tell people to always use the IPO VWAPs, but you should use what you're comfortable with. And you can do this anytime with any of these that just came out. CBRS was a good one. And you just say like, oh, couldn't get above it, broke it, and then that was pretty much it. 292, you're at 177, you never could get above it. It just kind of grind down at this point. But the point that I'm getting at with this is that's weighing on the market. But you had some really good news today. You had an upgrade, $100 target price on ASTS. Yeah, you have an inside day. But you didn't go anywhere. You had some really good comments on Rocket Labs. What did it do? The new closing level. So when you start to see this, that you still have positive news and you're still selling down, that tells you what the sentiment is in the market at that time. You need to pay attention to that. So I'm going to tell you why I'm saying this. Besides UFO, so everyone's looking at AMD and going, they're going to have a great conference. Well, you're going on two assumptions. There's two assumptions there. There's one assumption is that Lisa Su pulls it off. And she could totally pull it off, right? So the one assumption is that she pulls it off. The other assumption is that she pulls it off, and because she pulls it off, I'll give her another little circle right here. I'll just copy that again. I'll just drop it here like it's hot. There you go. Two Lisa Su's. And then the assumption is that because she pulls it off, that what's going to happen? That we're going to go up. So the assumption is that because we're going to go up, because it's good, we're definitely going to go higher. That's you have two assumptions there. And if you look at UFO, it's telling you what's going on with the market. And I understand you're going to say they're different sectors, and I got that. But good news is not being overly rewarded right now. So what they could do is take positive sentiment and then use it as a reason to sell. And I'm prefacing this because we're all waiting for Google's earnings on Wednesday, saying, and the premise is Google will crush, Google raises CapEx, and then we all buy semiconductors. That's what I think is going to happen. There I go again, thinking. Do we really want to watch that? Because we don't know for a fact that that's what's going to happen. That's what I think is going to happen. But what I think is going to happen and what is going to happen are two different things, and we all know that. So I do want to show this, and I do think it's important to show this. S5, FI, ND, FI, and what you have in front of you, I've showed you several times, but it's taking the breadth of the S&P and dividing the breadth of the S&P by the NASDAQ. And then we'll just drop it like it's hot, turn it to a line here. And what you're going to see in this area, and you don't have to go all the way back, but you want to go to like something like a couple of years and just see where those bottoms were. So if you go and take a look at April 24 or what happened in July 24, any of these areas, and it's more of a range. And really what you're looking for is a peak and then for it to roll it over. But you're looking to get up into this area. And what you want is this means that the S&P breadth is better than the NASDAQ breadth. What you're looking for is to get up in an area, like into this area, and then for it to then start rolling over. That's what you're looking for. And if you look at this on a chart, and if we just do this real quick, I think it's easier to do it this way. And then just go to this, nice little button, buddy. Click on, go to new pane above, yay. Just close this down, yay. So if you look at this area here, S&P, over, and over again, nothing's 100%, just deal with it. But it will give you a guide. And you can actually argue that back here, when we had all that liberation and winning, you're already in that area, right in here. Which does make sense because the S&P started getting worse than the NASDAQ because the NASDAQ puked. So if the NASDAQ so if the S&P gets worse than the NASDAQ, which could happen here, candidly, if that happens, then you might get something like you have here. But it does imply that you come in hard, and that might be exactly what needs to happen. That's it.
CENTCOM conducted strikes against Iran for the 10th straight day, as there are only 43 days left of U.S. oil supply, the lowest inventory in 45 years. The Pentagon is under fire for withholding dozens of U.S. military injuries during the conflict. Yemen's Houthis announced a maritime embargo against Saudi Arabia, effectively
I'm on a
banning Saudi
roll.
maritime traffic through the Bab el-Mandeb Strait. Crude oil surged above $90 a barrel,
Somebody
and the
stop
average
me.
U.S. gas price is officially back above $4 a gallon. Today we'll cover what to know for the stock market and where the action is right now.
CENTCOM announced that U.S. forces began another round of strikes against Iran at 4 p.m. Eastern Time today, and the Pentagon reportedly withheld dozens of U.S. military injuries throughout the Iran war. Another American soldier, though, was killed in northern Iraq during a controlled detonation from a downed Iranian drone. And Trump came out and said that every time Iran kills an American soldier, quote, they will pay for that killing many times over. But mediators have proposed a 10-day truce as a way to try to revive the interim U.S.-Iran deal that has basically collapsed. And Iran's foreign ministry confirmed that ideas for mediators have been conveyed to Iran, and the U.S. is saying it's open to continue negotiations. Qatar and Pakistan are the main two intermediaries here, and they're pushing for both sides to return where things stood before July 9th.
And on top of everything happening with Iran directly, Yemen's Houthi rebel group, which is Iran-backed, keep that in mind, just announced a maritime embargo against Saudi Arabia, effectively banning Saudi maritime traffic through the Bab el-Mandeb Strait. And this is a big deal because Saudi Arabia exports millions of barrels of crude per day through that waterway. Two of the most critical choke points for global oil supply is being disrupted at the same time. That's the kind of setup that can really move energy markets in a big way. The average U.S. gas price is officially back above $4 a gallon, and then you have this data point that is pretty alarming, where the U.S. only has 43 days of crude oil supply left, which is the lowest inventory level in 45 years.
So the supply chain cushion is already thin before you even factor in the Strait of Hormuz and Bab al-Mandeb disruptions. And the U.S. just sold 30-year Treasury bonds at a 5.06% yield, the highest result since 2007. To put that in context, the same maturity was priced at around 2% in early 2022. That's a massive move in borrowing costs in a pretty short period of time. And this AI CapEx angle is pretty interesting. You've got companies like Google, Microsoft, and others issuing massive amounts of debt to fund data centers and infrastructure, and that's basically competing with U.S. Treasuries for investor capital. That's a relatively new dynamic that I think is going to be a bigger story as we move throughout the rest of the year. If yields keep climbing, that's going to put pressure on valuations all across the board.
And looking at some of these big tech stocks like Tesla and others, they're set to report earnings this week. Wednesday and Thursday will especially be big days as you have companies like Tesla, Google, Intel, and others set to report. And when we look at the market environment from a broader sense right now, we can see the S&P 500's 6-month implied correlation has dropped to 0.15, an all-time low. What this means is that individual stocks are becoming increasingly disconnected from the broader index. They're trading more on their own rather than moving together as a group. The long-term average for this metric is 0.43, which is nearly 3 times the current level, and during the 2020 crash, it hit 0.82. So stocks are moving in almost the complete opposite extreme right now, which is very interesting.
Yeah, it definitely is. And as we go and look at the overall market right now, the SPY is 2.4% off of the all-time high. And we actually saw a pretty weird dynamic play out over the past few days where the SPY actually gapped down at the end of last week. Now, what it did today is it actually filled that gap down. And where that gap down filled was very close to 749 to 750. That is a major zone of resistance, and it's also right around the lower end of the recent range. We've been highlighting this recent range, and with the SPY effectively confirming back to the downside off of that range today, that is a very bearish signal in the short term. So I'm going to be keeping my eyes on some of these support ranges coming up. 739 to 740 is huge for tomorrow and the next few trading days. If that breaks down, I would not be surprised to see more selling pressure down to around the 730 support zone, if not even lower, down to around 722, 723, which was a huge double bottom back around the beginning of June. So watch all of these levels on the SPY. If this downtrend does continue, it would be a good bullish sign, though, to rip above the high of day from today where that gap filled. Although with where the SPY ended up closing, it's going to take some pretty good news or some high convictions to get it back up there.
Yeah, and not to say 2026 is an ordinary year by any means. Historically speaking, July is a good month, but during the second presidential midterm years like this one, July is the only month that goes green under 50% of the time. So keep that in mind. Looking for tomorrow, we can see that the economic schedule is pretty clear, and it's also clear throughout the rest of the week. So Tom, let's get right to the good stuff, which are some setups and predictions. A stock close to my radar is ticker symbol UGA, XLE, CRAK, and any other energy-related tickers. This is a group of stocks we've been talking about a lot, and they are moving higher in a pretty nice way. These tickers follow the energy sector. So, for example, XLE follows the energy sector as a whole, while ticker symbol UGA tracks gas prices. Ticker symbol CRAK tracks refining companies, oil refining companies, and these companies have been profiting quite a bit due to the supply disruption in the Middle East. All of these stocks are definitely on my upside radar for as long as the conflict lasts in the Middle East.
CRAK continued to the upside again today. Ever since bottoming on June 24th, this stock has had very few red days mixed in on the way up. I'll be watching these group of stocks very closely, Mike. And another stock I'm watching is Archer Aviation. It actually popped up around 20% today, having one of its best days in quite a while. Now, Archer has been downtrending quite a bit. It actually had a recent high, or all-time high, back in October of 2025, up around $14.60. Now, I am going to be watching this for a possible recovery back up here, and they actually had some good news today. They're launching a jointly developed autonomous VTOL aircraft platform for defense and commercial configurations with Anduril. Anduril showcased the defense variant Thunder, a Group 5 autonomous aircraft rotocraft specifically designed to multiply the combat power of current and next-generation crewed attack and assault aircraft. It's a very interesting-looking aircraft. You can see it on the screen right now, and it really got the stock moving with some positivity from a stock that hasn't had positivity in quite a while. And this stock is beaten down. I'll be watching for another recovery back up tomorrow and over the next couple of weeks with this stock. It had a lot of good momentum, and there's a clear high of the day to watch right around $5.45. So if it breaks past that, just watch for another good move like what we saw play out in the middle of the day today.
Very interesting. And yeah, I think it's a great day today. Another group of stocks that's close on the radar are Chinese stocks. There's like BABA. Of course, Chinese stocks have been getting some more attention lately as Chinese AI models are gaining a lot of traction in market share. But there was also news where China is deploying 2 major state funds to buy domestic equities and stabilize their capital markets, which will directly add buying pressure into Chinese stocks. So these stocks are close on the radar, not only because of the state funds literally buying stocks, but also because of the recent AI hype as well. Both KWED and BABA both had pretty good days today, and they're also on a pretty nice uptrend over the past few weeks as well.
There was also a recent $3.3 million big money trade called out on BABA back on June 24th, which was right around the recent low. So I'll be watching this one closely, Mike. It has a lot of time left, and it's been doing very well, up around 70% at its peak today. But with my next two tickers, I'm looking at UVXY and SPXS to the upside. These two stocks technically ended up doing okay today. UVXY closed down by 2.7%, but SPXS had a great recovery and ended up popping by 0.4%. But what I'm going to show you is the real thing to look for with these stocks. And, you know, we do a lot of SPY analysis here on the channel, and as SPY started to break its uptrend in the middle of the day today, which we actually highlighted in the Discord server. Check out the link in the description down below if you are not in there yet. But we ended up looking at this trend line breakdown. And as that trend line breakdown started to play out, you can see that SPXS started to explode on an intraday basis. If we end up looking at the overall move with SPXS, it had a pretty good day from its low of day to the high, ended up popping around 3%. So keep these stocks on the radar. They tend to do well if the market drops. SPXS is specifically tied to SPY, where UVXY will start to move if we see the VIX pop up.
Very nice. All right, well, let's jump right into today's momentum plays. With the first one, we have Bitmine Immersion Technologies, ticker symbol BMNR, to the upside.
Yeah, this stock ripped today. If it's able to break above the high of day, right around $16.90, watch it up.
With the next one, we have NewScale Power Corp, ticker symbol SMR, also to the upside.
Yeah, I like the way it closed today, up around the highs. If it's able to break $8.10, watch SMR up as well.
And then with the last one, we have Moderna, ticker symbol MRNA, to the downside.
Yeah, that was a nasty end-of-the-day move with Moderna. If it breaks under 59.30, watch the downtrend to continue.
All right, so we have these 3 stocks on the radar for potential continuations tomorrow if and only if they break through the levels listed. These stocks are volatile, so always protect yourself, use stop losses, only enter trades you know why you're entering and you feel good about, and focus on making smart, disciplined trading decisions above all else. Besides that, let's jump right into today's $1.44 big money trade. Today we are looking at ticker symbol AMT. The trader here bought the 175 strike call options that expire on March 19th of 2027. The trader here is opening this bullish position. This company is American Power Corporation. They are a massive global real estate investment trust that operates, owns, and develops over 220,000 communication sites across 25 countries. The stock is roughly 45% off of its 2021 all-time high. Looking at these options, they are slightly out of the money, which gives the trader some nice leverage, and they also expire in 2027, which makes this more of a longer-term trade. So if you're considering it, make sure that you're willing to actually trade with the time it needs.
Yeah, and the one good thing with this play with AMT is that it's actually right around a huge technical support zone, very close to $160, maybe even extending it down to $155, where this stock has bounced multiple times in the past, and there was even some points where this stock was bouncing close to like 178 to 180 in the past as well. There seems to be a huge zone of support on this stock, and the thing that I really like about this big money trade is the time that it has. It's going to allow this stock to play out down within this lower range. It might take a little while to actually bounce off support a couple of times, but overall, it creates a really good risk-reward ratio situation. If you start to look at a good downside stop loss target, you can actually put it just under like that 153, 154 support, and then you can end up targeting the recent high. And this would be a pretty safe target in my book, and that would still be a risk reward of 1.8. And of course, if you go back to highs of 2025, maybe even the middle of 2024, the RR really jumps up to like 4, pushing maybe even 5. So I like the setup here. The technicals are looking good, and it's an interesting stock. It also doesn't necessarily move with the overall market much either.
Safe.
Yeah, which is good and bad in this market. So either way, let's keep it close on the radar. And if you're new to the channel, welcome, and consider obliterating that subscribe button. For every single trading day, we post brand new videos just like this one, showcasing crazy $1 million big money trades, stocks to keep on your radar, upcoming news, important events, earnings, past stats, the most important things to know about the stock market, and so much more. It takes a long time to make these videos, and if you subscribe, you'll get them recommended to you more often. We also want to give a giant shout out to today's member of the day, Praximus, in the Stock Up Discord, who had 2 nice hits today with Apple and Tesla. Huge shout out to you, and keep up the great work going forward. It's awesome to see posts like this one. Thank you guys so much for watching, and let's crush it in the market tomorrow.
Maybe I ought to think about starting to fly twice a week.
Hello everyone, welcome to Market Beat Monday. We hope you're having a great start to the week. Glad to have you with us. This week it is just me and Chris Markoch. Thomas and his family are on a vacation, much needed summer break. I hope everybody's getting in some summertime this year and not just always in the market all day long. The summer is about us. But today here in the market, Chris, let's get right to it and talk about overall. I think you described kind of what's happening in the market today as kind of ping-ponging. What do you mean by that?
Yeah, so the shares market was down pretty significantly to start the morning, but it's come back today, and then you're seeing you've been seeing it kind of go back and forth between losses and gains. I think the last time I checked it, Nasdaq was up today, but S&P Dow were down. So you know, there were a lot of headlines today regarding conflicts, so on again, off again things for energy stocks. Just a lot of, I think it was kind of like a lot of movement, but really at the end of the day, not really much movement at all.
Yeah, also just so much mixed red and green here. You can see in the heat map, there's just a lot of mixed bag is a good way to put it. There's a lot of up, there's a lot of down, kind of across multiple sectors.
What
We're
happened?
talk about some of
Lost the
ups
propeller?
today. At least we're in the green for the first time in a few days for the memory stocks. We had NU was kind of a big story last week. Sandisk, other memory stocks that were all down significantly, down almost 30% in a month. Finally in the green today, at least a little bit.
Sometimes you can wondering why stop. You have to stop too. I think.
Especially as it relates to the technology.
I got away with one earlier. I think I touched the ground and somehow the prop was still running.
I think this is a good example. Memory stocks are down, but they probably got beat down a
my
little bit too much.
computer
They're coming back.
has
They're not coming back as strongly or as quickly as they went down. But still, I mean, you saw Micron was up about 2% today. Sandisk was up about 2.3% today. So those are small gains, but let's see if they build momentum over time or if this was just a one-day thing. Hard to say, but that's what you're saying right now.
Yeah, for you, I mean, we're still significantly down for some of those memory stocks.
Yeah.
Is it still a good buy the dip opportunity for investors? Do you think this is the start of a bigger turnaround, or could we see a little bit more ping-ponging with some of these memory stocks?
I still think
let's see if I could
these are
put-
going to be buying opportunities. It's hard to call an exact bottom when it's going to happen.
Remove
I
the
think they could
minus
pull back a little bit
symbol.
more, especially in the next couple of months, because we're getting into that point now where I think you can what I've noticed over the past few trading days is we are solidly in summer. I mean, for many of these stocks are trading at lower volumes. You're not seeing a lot of really high volume selling or buying. So I think it's possible that you're going to
Thank
see
you.
more volatility. That's what lower volume can bring lower volatility.
Now I
just
need
like-
one
or
more
lower
to get
volume can bring high volatility, just like
rid of my
high
little
volume.
dash in front of my
We'd like to
score.
see something more towards the average. So yes, I think there's a buying opportunity there. I'm not sure if even right now is that time.
Yeah, we're going to get
Uh-oh.
some of
Well, that's not
volatility
helping.
to the upside today. That are very popular Market Beat Monday stocks. So we'll get to those first, but I also wanted to comment on the super chat to start us out. Thank you so much for doing that. Little Sandlots, love that. We will get to both of those tickers right after we get to these two big movers of the day, and that is Archer Aviation and Iron, both popping about 20% today. It's definitely noteworthy. Archer is one we talked about so much on Market Beat Monday, talked about on the show a lot about a year ago when these stocks were going crazy, and they've been in the red until today. What's behind this move?
Yeah, so for Archer, the move was the company unveiled its Thunder autonomous eVTOL specifically for the defense industry. It's named Thunder. They're manufacturing this in partnership with Anduril, and so it's designed to accompany crewed aircraft and helicopters. And so that's been big news for them because they've been looking for something to, or I should say investors have been looking for reasons to
get back into these stocks. It looks like certification for Archer, they've been saying their certification looks like it's being pushed out now until 2028. They're certainly hoping that gets done so that their aircraft can be used for the Summer Olympics in Los Angeles. That's the goal. We'll see. That's a process that takes time. The certification process is different for the Defense Department, which is something that the company is excited about because it means that they can get this vehicle into service faster, which could be a good use case in terms of even trying to get the certification on the commercial side.
Interesting time to be looking at Archer. Some positive news for this. One thing I see with stocks like this, they've really been beaten down. We look at where the stock chart is, and anybody who got in on Archer early,
I'm just kidding.
like October timeframe in that $13, $14 range, is pretty disappointed with their investment, and maybe is already bailed. Probably is already bailed if they bought in at the high, and it's been hanging out there for a while. And I'm curious, just looking at DC ownership, about 60% institutional ownership.
Oh, come on, where are the biplanes?
I think some retail investors maybe lost faith that these eVTOL stocks are going to go anywhere or do anything, but analysts are super bullish. Looking at what the analysts have to say about Archer, things that are calling it, have some positive things to say. So do you think that this is the start of a turnaround for Archer? Could it be some more low-end volatility before we get back to those highs again?
I suspect there's going to be some still volatility. It was up over 20% at one point. I saw it close just under 20%.
Them circles are harder.
This is still a sector that is still in very, very early stages. And I think, again, the caveat that I had to use today was the fact that Archer is now saying probably 2028 before it's going to get commercial certification for these. I couldn't tell you, Bridget, that I know exactly why that is.
What happened?
I've heard some things anecdotally say that the FAA hates these and they don't really, there's kind of slow walking the certification. I'm not necessarily sure if that's true. I just think that it's a new form of air transportation, and I think it's just something where they're going to have to figure out how these fit in with these flight plans and how all this is working. What I would be, if I'm an investor who likes Archer, where I would be discouraged about it is the fact that the certification timeline is really going to be the same for a company like Joby.
You guys ever play Atari?
Certification is going to be what certification is going to be, and they both have to wait on that. The good news is, again, getting a product like this developed for the military, you'll be able to provide use cases that may alleviate any concerns that people may have about safety and reliability, things like that. So
that last crash reminded me of Missile Command.
What's going to be holding the stock down now is the fact that if you can't get certification done until 2020, and some people are hoping that's going to be
we're all on the minus.
Generating revenue, of course, when that leads to profit being even down the road. Some because
everybody's got. Oh, well, there we go.
That it might be
the first.
Before you've seen Archer become profitable on a GAAP basis or even an adjusted GAAP basis. So that's really what you're seeing right now. You're just seeing the headwind of. I think analysts, and you're right, not many cover it, but you got about 7 covering it, so that's not bad. I think they're tweaking the technology, but you're not seeing these things flying around. I think that's what it's going to.
Yeah, I think that's a great point, Chris. I think the timeline of
almost cut you.
People were saying these were going to be commercial by the end of 2026, and that's not going to happen. So I'm not hearing much about chatter in the chat yet about these stocks. So let me know. I'm curious. Have you been holding your Archer or Joby or eVTOL, any of these eVTOL stocks? I'm curious if you're holding on to them. Are you adding to your position, or are you done with these because of the volatility they've seen? I'd love to hear your thoughts in the comments and in the chat. If anyone is curious about these anymore, they haven't popped up in discussion much. But this one has. Let's move on to the next one. That's Iron. Iron has been there almost every single week. And this one has had a lot of volatility, but now we're back to the green. Also about a 20% pop today in Iron. What's behind that?
So one of the things that happened with Iron is they announced about $2.8 billion of new deals, and that's going to increase their annual recurring revenue target for the year. So it's big news because Iron, along with a lot of the companies in this
somebody got something
because of this idea that data center demand is not what people said it was. Certainly when Iron announces $2.8 billion in deals, that contradicts that story to a certain extent. And then when you have a stock that was as beaten down as it was, it's down over 32% for the month, even with this 19% gain
fancy.
So the stock's been beaten down, and so you're going to have a weak rally coming from that.
Yeah, were there other stocks in the same area that saw a little boost today as well, or is it mostly just Iron?
Will I be next?
Yeah. Let's see, Applied Digital is the first one that comes to mind.
Digital would be an interesting comp because they're another one that was a Bitcoin miner.
Yep.
They're probably like most
that depth perception is amazing.
10% today, so yeah, so there's a little bit of something going on there. Let's see. Digital.
And you can see on the digital
Applied Digital about 7.9%. So yeah, there's so it looks like the entire sector maybe just got a little bit of a bid. But again, Iron's the one with news, so Iron's the one that gets the biggest bounce. And again, $2.8 billion in new contract, that's not anything to that's not anything to sneeze at. That's pretty significant. I'm just looking here. Yeah, especially when you consider that Iron's done about well, it's less than $1 billion in the last 12 months. So when you start seeing them announce $2.8 billion in new deals, that's applying significant revenue growth over the next 12 months.
Yeah. I'm also just looking at all of these. They've been in the red for so long, and now they're
going down
consensus
for
price targets
real.
are showing 100% analyst expectations that are pretty high on a lot of these names. Right now they're trading far below that, so I think that's interesting to look at too.
Must have lost it in the sun.
50% below consensus right now. So do you think it's a good opportunity for any of these names, or are they still a bit of a risk?
I think what I would be thinking about as an investor is just managing your position size, and the idea is you don't have to go all in on these companies right now. You have to have a position that you're comfortable with the volatility, because these stocks are going to swing violently. They just are. That's the stage of growth that they're in. And there's a lot of investors that just aren't comfortable with those down days. It's going to be about 20% down for a day. They're not comfortable. Other on the days when it's up 20%, but when it's down, they just that's hard for them to take. But one way to do that is just manage your position size. Make sure it's not taking up more than a certain percentage in your portfolio that you're comfortable with, and go from there. But I think the long-term story for something like Iron is positive. And one of the things I like to say is that they're not dependent upon necessarily news. You just were renting it out. You were using
Landing.
Good job, Q.
Yeah. Tom Stone, somebody in the chat said, Iron is, and all of
No crashes.
I got 100.
It's not an unfair assessment. There's a little bit of up and down right now.
Minus
Minus 100. I had minus 25.
I would go back and rebuttal on that and say, I think there's a lot of traders who treat Iron like it's a business deal. I don't necessarily think it is. I think the business case is there. It's going to be volatile, and I think there's a lot of trading. It's a lot more volatile.
Yeah, very good point. Well, we got to run through some more of these. Let's get going on some more. We had, again, that super chat early on. Thank you so much for doing that. Let's get to WBI and AGPU. So WBI, I think these are those kind of new names that we haven't covered much. Actually, AGPU was on the show a little bit ago. But WBI, Waterbridge Infrastructure, it looks like it's a pure play water infrastructure company, and that's in demand. Maybe has a tie with the data center build. I have no idea here. I'll give you a minute to look up the company, but I'm just going to run through the chart a little bit. It looks fairly new. It hasn't been trading for all that long. It is on the uptrend right now, up 33% in the last 3 months. It does have a little bit has a little bit of analyst coverage here. Again, pretty new. Looks like it's trading above its consensus, but there are a couple of higher ones around $40. And short interest is already up at 10% on this new little stock. Anything that you can find, again, with just one person here, we're going to need to take a minute to take a look at what's going on.
So, I'll admit I'm not. This is the first time I'm taking a look at the stock. I like the stock. Water infrastructure is going to be huge. I think that just is a knee-jerk. Yes, that interests me. It's looking like the balance sheet.
Ooh.
And
hey, appreciate it.
Pause about buying in stocks
somehow.
Because it's only been trading since it looks like about late last year. But they've got a
those are always fun.
Level, might mean that's something that if I was an investor I'd be concerned about. Again, they've only been publicly trading for a little while, so we have to give it a little bit of time to report earnings. Volume is pretty low today, so it's not a great example.
Well, it's always good to hear new names on the show. That's what I like about this one. Again, the fact that it's fairly new, I'm assuming the company's probably not that new itself. It's just a new public company.
Yeah.
But as far as details about it, even on our website, we don't really have much. This is one of the shortest descriptions I've ever seen about a company. It's
I don't hate the chart. I mean, it's pretty nice. Nite has been finding some good support at the 50-day moving at the 50-day, the 50-day simple moving average. Trying to see if there's anything on the.
One thing that stands out to me from the stock page, and again, sometimes I can't certify if these numbers are correct, but the PE ratio looks really quite high.
Yeah, that's
Caught you before you could hit the space bar. That was cool.
So it is reported positive earnings. Looking here to see. Yeah, it's a little hard to look at it because it doesn't have a lot of data going in, but yeah. So, for me, it would be a stock that you're going to want if you have a lot of conviction on it and you believe in that dividend, which 15% of cash, okay, that's a safe dividend. 80% of trailing 12 months earnings is high, but
damn it,
based on the other estimates, this year's estimate, next year's estimate,
yeah, come on.
The problem is I'm transparent.
You're upside down. Might as well hit the reset button.
Yeah.
Wait. Oh, that's hilarious. Instead of cutting yours, you got mine. Nice trap there. Oh, that's funny. Oh, yeah, here we go.
But again, this is one of those GPU,
now I'm a part of things.
AI stories, very much so. And it looks like the stock is down 26% today. So it had a really big jump up. Any idea where it's from?
Okay, so this is another one that's falling into that neo-cloud space. And similar to Iron, the company announced that they have secured $25.9 million in total contract value across 2 long-term agreements. So again, it's that idea of it's sort of pushing back on the narrative of where the idea is coming from, and you've got now companies like Iron that keep saying the demand is there, the demand is real, and that's going to be something that should be showing up in their earnings, and not just this quarter, but in the future. I don't know when we're going to report. Looks like there'll be some kind of August maybe.
If only I hadn't been so transparent.
So that's the biggest reason for the reason why the stock's going up is that they announced the contract, they announced some of this new business. So
one question I have for this stock, and really any of the others that we're talking about neocloud, somebody asked about Nebius. I'll pull that chart up really quick too.
Sure.
They're all companies that do a similar thing, which is providing space and more compute space for these AI models. Somebody was talking about different deals with them for a couple of different companies. And the one thing that we've seen in the past, if the past tells us anything, is in the .com days you had dozens or hundreds of companies coming up, and not all of them can make it. And so I wonder if that's the case with some of these neo-computing companies. A GPU, could it be one of them? How do you choose one? Will all of them make it? Some of them may not make it, statistically speaking. So what are your thoughts on all of the different stock we're talking about that really do something fairly similar?
How did we all miss each other that long? That was amazing.
these type of companies,
There we go.
Okay.
I think reporting that there's actual revenue, actual demand there for what they're doing. So that's
somehow I wasn't in last place.
the .com, a lot of the .com failures are due to the fact that you had a lot of companies that just believe that, we put a .com on it, we put a website up, and we can do this. We can just, the business is just going to come. They didn't appreciate how difficult it was to have all that other infrastructure in place, and that's the problem. Is the infrastructure wasn't in place at the stage to, do the e-commerce. Like today, we don't even think about it, but it wasn't in place back then.
Here I go again, I fly forward.
Is that going to be similar today? I don't know. I wouldn't be as worried about these companies because they're getting revenue from the companies like Anthropic, from the companies like Meta and Microsoft, who are those companies aren't going to invest in these companies if they don't have the demand. There's absolutely no reason for them to do it unless they know that they have the demand. So I think there is a concern that there may be some in this AI, call it bubble, don't call it bubble, I don't really care. Whatever this AI surge is, there's concern that some of these companies will be not 0% chance that they are going to fail, but I'm not necessarily sure if I would put Iron and a company like Nebius and Axe in that bucket. I think investors have to be careful. There has to be a path to profitability at some point. you know, because iron is everything we're talking
That's
about.
not the typical way that goes.
Not profitable. You want to see that path to profitability. That's going to be coming through what you see on the top bar, and certainly what you heard from Iron Day, what you're hearing from Hackers, that's future revenue, which hopefully can lead to future, profit. But, certainly a reason to be careful.
Well, thanks again for doing that super chat. It's great to have a couple ones to start out with. We've got a couple other earlier stocks that I wanted to cover from people doing this right away. UiPath is one of the ones we looked at right before we got started. This stock is so interesting. Just looking at this chart, it is wildly volatile. And I think a lot of the names we covered today are, so it's not unheard of, but there's been so many ups and downs with this one, and the volume is also interesting on this one. What do you think is behind today's move? And not a huge move as far as like the stock price, but it does look like a big move on volume today.
Well, it does. The volume is, we were just talking about stocks that are trading on relatively low volume. This one's traded over at normal volume. Normally, the average volume is 40.6 shares. Today, it traded over 169.6 shares. The question really becomes of, is this stock trading on no news? I'm not necessarily sure I would say it's no news. There was news that came out late last week that said they have a AI pricing deal with a retailer in the United States. I don't know if that's one of the reasons why the stock's been so volatile. There's some people thinking that with short interest being at like 34%, this could be some sort of repositioning, and obviously if the stock would start moving higher aggressively, that could put those shorts into a bad position where they had to cover in a short squeeze scenario could be in place. I don't know that, not trying to predict that.
I'm missing a little piece.
Odd, something's going on there because there doesn't
not anymore. Thank you, Q.
Trading on that high of a volume, but that
I'm whole again.
Really much of a difference in the stock price.
Yeah, I think this is an interesting one. What does the industry do again? Which industry is it in? Let's talk a little bit about what it actually does.
Robotic process automation, RPA. So it's a software when it comes down to it. But they have the software.
No depth perception.
AI, ML capabilities, in that robotic space. So
I think that's interesting. I forgot that it was part of the robotic story. I think robotics
Where are we?
around this year has been really interesting. It's one of the hottest topics to start the year, and going into the summer, a lot of these different robotic stocks are down. Serve robotics is one I think about. There's a few other different robotic stocks that we've talked about, and they're all down. Why do you think that is? Is it just taking longer to get commercialization than people had thought? Was it overhyped because people were excited about this physical AI story? We had many different talking about this is really the next big thing, and then the stocks are down right now. What do you think is behind that?
I think in general, I would say the story, the stock price is not heavily especially if you start talking in the area of humanoid robots. This is still early stages. I know that I'm not saying the technology is not real. I'm not, I'm not going to bet on the fact that.
I thought you were going to get me there.
Optimus Prime scale and all that stuff, but
many
I still think the market's somewhat of an early inning story here, and you're going to have to figure out what the adoption is. Interesting, like you have a company like Food Surgical that they had earnings report last week, but the stock a little bit down because surgical procedures are down. So even though the company's seeing more adoption of its robotic surgery, we're seeing
many
overall procedures be down. So I don't know, Bridget, if that's maybe a part of it, is they're finding that maybe some of the application cases that are there aren't necessarily there at the scale of
all the butts.
It's something to take a look at.
Yeah, interesting. I'd love to hear from people in the comments. Do you think that robotics kind of look at buying a dip in robotics? Do you think it's still too far off to really get any kind of near-term profits? Or do you think it's much more of a long-term story? Let me know your thoughts. I'd like to hear from different people. It's interesting to know what your take is on these different factors. Speaking of moving ahead of the space, I've got a few different questions about space stocks. And if you want to get involved in this one too. A couple questions about, is there more space stocks? I feel like we're going to get that question almost every week. But Redwire is another one where, people were in on these, they were doing so well, they saw some really good gains, and they lost those gains just as fast as they came. What's your take on when we might see a recovery there, or if we'll see a recovery? Is it just a long way off before we start to see
so I'm not. I think that the story for SpaceX.
Nice.
It's kind of falls in that category. What did you think was going to happen? Because that's kind of how I felt about it.
You need me to get out of this transparency mode. Running away.
Yeah, if you stress that when you are transparent, it takes longer time to get.
And so yes, I think until the end of the year,
I was playing defense.
I think it's going to be a highly volatile stock, and something that I think investors, unless you are committing to this thing and saying you are going to ride or die with this thing, you might not want to get involved, or if you do, you might want to make sure you really watch your position size. But I'm not necessarily betting against the company. I think the story is still there, but
wow. I held on.
This company's still not profitable. It's still generating a very tiny amount of revenue in the big picture. It's got a huge amount of research what it's actually delivering fundamentally.
Here's a welcome problem.
It's not investable. No, it's just that, yeah, you know, it was flying pretty high there. It was up to about $180, $200. And yeah, this pullback isn't unexpected to me.
I would agree with you, Chris. I'm not surprised by the pullback. It's kind of take it all of your feelings or thoughts about companies. I think just any IPO.
All right.
We see so much of it.
Here comes the fun.
It's a story you can see in almost every IPO stock chart. So very much expected to me. But I think maybe not as expected are how much the SpaceX launch or IPO, I mean not the launch, the IPO actually impacted the rest of the space sector. To see how much all these other stocks like Rocket Lab, one of them you can see run up to the IPO. And as soon as the IPO hit, the stock drops. The same with Redwire. You see this run up to the IPO.
What happened? You scared?
And the stock drops. So is it interesting to you or concerning to you that these stocks traded like right alongside what SpaceX was doing? Will they start to trade on
That
their
was
own, or
not
are
the
they all
cartwheel I was hoping for if
what
I'm going to
SpaceX
catch the fence.
Okay, so my answer to that is this. I think that they all sold off when SpaceX debuted because there's a lot of investors who want to be in the space sector, but a lot of investors really wanted to be in SpaceX. They couldn't be in SpaceX, so they were one of these other companies. So now, this is where I think the season really gets interesting.
What's this about a blind squirrel and an acorn? That was funny.
Why they're worthwhile investments on their own merit, which I think many of them are. And I think that's where this gets very interesting. Because you're right, Rocket Lab, which is probably the closest pure play proxy to a company like SpaceX, it's down 38.7% in the last month. That's pushed it down.
We're going to have to work on these circles.
7%. It would appear that, you know, where you're looking at the chart right now with Rocket Lab, that it's...
Oh, here we go, here we go. Oh!
It's around 65 now. It gets around 57, 58. That's a very attractive buying point looking at the chart and past levels where it bounced. So, you know, that's where I'm at with the space stocks. I think they all felt because people said, oh, we can buy SpaceX now. And now they have to decide as these stocks are pulled back, are they worth investing in again? I think they're going to see. Yeah, there's a story there, and that stands on.
Yeah, ASTS is another one that people have brought up in the chat here, and I'm looking at ASTS, and this is the lowest point it's been really since December timeframe. It's reaching, it's far closer to its 52-week low than anywhere near that high that it was at. So I think this is another one that we've talked about before, potentially buy the dip opportunity too.
I would agree. It's funny because we've talked about this before. You look at this, you look at Rocket Lab, you look at Redwire. I mean, all the charts are just almost amusingly the same. I mean, they've all fallen. They were all right at the end of May, all plummeted. But again, this is a good stock when you're looking at where it is. And again, it's trading at around $57. And yeah, based on past report levels, that looks like a pretty good opportunity. Let me see when they report. They report on August 10th, so not too far away. And again, I think investors are going to hear that, and that's when you can start making decisions. The story there again is, are you going to see revenue growth that's going to support an eventual path to profitability? Because it's not a profitable company right now.
Yeah. Another one, I'm keeping the wrong button. I'm used to Thomas being here. Thomas is not here today. There we go. Another one, not quite space.
Thomas.
Yeah. We'll talk about another
one.
Oof,
that was close.
I think that's worth talking about.
I got all my wheels still, though.
Before we get to Oracle, I want to talk about Red Cat. Somebody had mentioned it, and the comment was, I'm so surprised that drone stocks aren't doing as well. And I have to admit, me too. I was very bullish on drone stocks to start the year because of all of the investment from defense spending. I know there were multiple, not just in the US, even in Canada, there were some huge intentional investments in beefing up their drone capacity from governments all around the world. And I really thought that was going to resonate better with these stock charts. But you look at Red Cat, and it is not great. We're down 30% for the year, 38% in the last 3 months. What do you think is going on with this drone industry?
Let's see here. I just got a call up here. So
sometimes those wheels don't roll very well.
Yeah, I'm looking at this. I just point out it wasn't just me. It's not just this isn't coming out of anywhere. I mean, analysts have been very bullish on what these drone stocks are going to do. Red Cat is one of them. Ondas is another one that's seen a lot of volatility. There's Kratos is another one. All of them are kind of seeing the same volatility. Dragonfly Drones, we had the CEO on a few times, and they went up really, really well, and that stock is down a lot right now too. And they're kind of trading as a sector, which is a theme of this show today, Chris. Yeah. All of these are kind of trading similarly across the sector. But why do you think we have such analysts or such bullish analyst ratings, upside of 175% on Red Cat, and the stock is still down this much?
Okay, so a few things I would comment here with Red Cat. 30% short interest, 37% institutional ownership. So that's telling me that institutions aren't helping out retail that much. Retail's basically in this, and the shorts have a lot of pressure they can put on the stock. They can apply a lot of pressure, and it seems like that's what's happening right now. If I'm just taking a look at the stock and say, that's probably what's going on. As far as the broader industry and why it might be down, just going to spitball this.
That would have been a cool moment to catch it.
We're not seeing the fact that defense spending has been cut.
Oh, come on!
There's just
that's amazing.
Operating
that was
whatever
too bad.
It's not a budget. Let's just say that.
We're
just operating.
getting away with the fancy move here.
A budget for the defense department, and I think that's a lot to do with it. I think if you had a confirmation that said this is approved, this is the budget, we're going forward, because I think everybody
still
knows
got two wheels.
Warfare and the defense industry is going. It's going in this sector, but we don't have a, we have continuing resolutions. We're operating under continuing resolutions. We're not operating under a budget, so it's something that I think is questioning for this. But in the immediate term, I just look at it and say 30% short interest, 30% institutional ownership. It's going to be a tough fight if you're a retail investor. You're going to have a lot of conviction to hold the stock long against that kind of pressure.
Yeah, I think that's very good. All right, let's move on a little bit more and go to the Oracle story here, because this is another YouTube creator. The stocks we talked about is Oracle. Vastly different from the opinions of analysts we've had on the show. We had Wall Street person Mark Chaikin, who says Oracle is one of the most dangerous investments.
He had 2 crashes.
Oracle it has so much.
I had 4 or 5 crashes.
Thomas all the time
I didn't have any crashes.
And thinks it is a great buy to dip opportunity.
Nice.
Where do you stand on Oracle, Chris?
So, I would say this. I still
through the fence.
The level of, I understand why it pulled back on the debt concerns, because people are looking at companies like Amazon and companies like Microsoft that are doing this, and they're spending on CapEx, but they're spending it off of the balance sheet, so they're not raising capital from the private markets, at least not at any level that's being reported. Oracle's different. They're taking on debt to do a lot of this, to fund a lot of this. The question you have to ask yourself is, are they going to be able to grow to support that? And the company's got a backlog of close to $1 trillion. So it would appear to me that if you're trying to take the bet that they don't have the business to pay the debt and to become, and the cat's really going to be eating into their earnings, I don't think that's a bet that I would take. I think they've got the, I think they've got the order book to back it up. Again, I certainly can understand why people may have, knee-jerk reaction, pull back on the stock, especially.
Oh, there you go. That's how it's supposed to go.
It's trading up over $250, which is extreme compared to where it was, but it's trading at what, 18 times full earnings. I mean, that to me is a bargain. And I don't. The debt in and of itself is not something I consider to be dangerous. If that debt becomes prohibitive to their free cash flow, okay, that might be a different conversation for me, but we're not going to know that right away. So, the company reports earnings on September 8th. That's going to be kind of one of the first proof points there. But my inclination is I agree more with Thomas than I do with Mark Chaikin. Sorry, Mark. I do love Mark's work, I do, but this is one I don't see part of.
Yeah, there's all kinds of techniques on Oracle for sure. I know this stock that has split the market with people having different opinions on that. We have covered a lot of tech today and a lot of these small cap riskier names. Let's turn to some other questions that we have coming on the chat. One of those is Netflix, and I know you and I have talked about that before. Let's turn to Netflix and see what you think about that as a buy right now. It looks like it is down about 10% in the last 3 months. And I think I remember talking about Netflix as a potential buy sometime around this time frame. I'm not sure exactly when. So let's see about earnings. We've got positive, decent earnings story. They've got a new earnings, or they just reported earnings.
Yeah, they didn't do too well.
Yeah,
they didn't do too well. They beat by a penny on earnings, and they missed slightly on revenue. The problem that Netflix is having is the idea that they're not new anymore. So they're not, and I think people are starting to wonder where the growth is going to come from with Netflix. For a long time, for many, many years, if you go back, you know, just 5 years ago, which is like an eternity, they were part of the FANG stocks. Facebook, which is Apple, Amazon, Netflix, Google, which is Alphabet. They were part of that. Before the Mac 7, there was a FANG stock. They were part of it. And that's because everybody was banking on the growth. It was always going to be there.
The rear give and get one at the exact same moment.
They kind of had the growth themselves. Now you're looking at an area where they're competing with YouTube, and they're competing with short videos, and they're competing with a lot of things, and people are starting to wonder where that growth is going to come from. They're going to have to create new content. That's going to be expensive. They're trying to get into live sports. That's going to be expensive.
Come on in. The streamer is fine.
And then the company said they're starting in the first quarter of next year, 2027. They're only going to report their engagement numbers in the first quarter. And after that, they're not going to report their engagement numbers. They're only going to do it one time a year. That has some investors a little bit miffed. Now, in fairness, Netflix kind of did the same thing with their subscriber numbers. They said, well, we're not going to report that.
Again. I give one and get one.
Like, oh, okay, that's fine, you know, that's fine. But the question's going to be, there's concern that the engagement numbers could impact.
This time I just gave one.
Revenue on the ad side of the business, which the ad side
Ooh, we'd be tied.
Years. So there's a lot of reasons that people are cautious on Netflix. I've heard some sentiment that it's kind of getting to that it's so bad it's hate stage.
Oh, look at Q over there.
Yeah, I'm looking at the score. And
if you expect a stock to really pop in the next 6 to 12 months, okay, maybe, and I see some analysts.
Somebody has to stop here.
But I'm
too early.
I think it's going to be. I think it's going to take a couple of earnings reports before investors start to feel real comfortable with the stock.
Right when I was going to ask, is long haul invisible?
Yeah. Let's talk
And
about
then he
it.
clipped me.
A couple of super chats. Thank you guys for doing that. Love to see it. One
One
nice
minute.
video on a long time ago was Elf, and people talked about Elf being a nice little performer this year. It's up 8% today. Looking at the chart, I mean, it looks like it's down on the year, but the last couple of months have been pretty green for the stock.
Did you just catch a twofer?
Almost 5% year to date. Yeah, I'm trying to remember. It's been a minute since you and I.
Did I crash? Or you crashed?
Okay, yeah, this is a little bit of the. They had some higher cost of tariffs. It was a little bit of a tariff story and things like that. But that's mitigating somewhat.
I am looking.
Damn it! Oh, I got one.
Company like Elf, over 20% short interest.
Wow, that 25 could come into play here.
Which is really, really
Oh.
good for the company. It looks
No,
like
it
there's
isn't.
earnings coming up in a couple of weeks, so that'll be interesting to see. Any thoughts on the growth of this company? Do you think it's going to
Oh! That was close.
I think we are closer.
That was the 25 didn't come in into play, but it was close to.
33 times earnings. So,
Okay.
that could be a little bit problematic right there. The fact that they're maybe not growing their earnings fast enough.
Q1.
Where they're at right now.
Coming right
So,
behind him.
the stock was one of the stocks that really got ahead of itself.
I have a crash.
You know, it's up
Actually.
200.
You had a crash, Scott.
in the last 5 years.
Right.
So it really shot higher towards the end of 2024, and I think a lot of that was, you know, that was when the return to office really kicked in, and now it's been trending lower since the middle to end of 2024, and you know, I think that should, but in fairness, you also see it come back here in the last month or so. So that I think earnings would be pretty key here to see. Are we going to get the earnings growth that we expect? Are they
Where is everybody?
Tariff concerns? You know.
Therefore. I'm good enough look on that one. Let's move on to. Let's move on to some super chats here, and we're going to talk about biotech stocks. So we are going to IRWT first. I looked at both of these. Brian, thank you so much for this.
Run my head there.
I think they're both great stocks to look at. They're up quite.
Oh! Ooh, that counted for 2 for some reason. I got minus 50.
It's up 402% over here. And want to see what analysts have to say about it. about it, still upside from analysts. So analysts seem to be pretty bullish on this one. While you take a look at that one, I am going to pull up the other one that he has to look at here too. I think that these kinds, Chris, you are the biotech expert, and I know you're doing a cold look at these, so I want to give you enough time to take a look at and see what's going on. Arctic has this awesome feature, which is the FDA tab page, which kind of tells us FDA events, and it shows what's happening in stock. If there was any kind of news, it's a great way to look at kind of the timeline of some of the
Learning to
announcements.
fly.
Looks like there was something that just happened on one of their drugs on July 14th.
But I ain't got
That's
engine.
one of the most recent ones. I'm looking at earnings really quick. Still pre-revenue, still interest is a little bit higher.
Coming
It does
down.
look like there's not much information on institutional ownership. Not a
The
whole lot
hardest thing.
It's the for sure thing at that point.
It's been a while since I do remember I've written about this stock on a couple of different occasions, but yeah, they're still clinical stage. The big news there was the FDA event, which happened just last week, and that's not insignificant. So they confirmed that they're in phase 3 trial for their lead candidate. They initiated the phase 3 in June. They're now actively recruiting patients for it. That still means that they're still a while away from actually being actively generating revenue and things like that, and they still have to get it. I think what it could be
Somebody
could be getting
got
excited
me.
here, Bridget, is whenever you get a company that now has a product like this in phase 3 trials, that it could become attractive for them to get bought out by somebody else, or that a company wouldn't necessarily buy out them as a company, but they'll partner with them to help make sure that they can get the product through the FDA approvals, and then also provide them with the capital to help get the product to the market. So that might be something to consider here with IRWD. Analysts certainly are loving the stock, and it's got about 7 analysts covering it, which isn't bad.
Especially for a small company like this, I think it's an interesting one to look at and see the jump that it's taken since late last year, and it's really held on to that, and I think that's interesting too. I want to get to, because we're in our last couple of minutes here, I want to get to Alto as well, because you asked about that one. This is another biotech stock. This one's up 370% this year, and this one is just, looks like
Which one is it? ALTO?
ALTO, Alto. It's
Alto Green.
up and to the right since October. It's just seen a ton of growth, which is fun to see. Looking at what analysts have to say, they still say there's like 80% upside on this stock. So even though it's already run up this much, it would have been great if you got in early. I'm interested, Brian, the one who wanted to do the super chat, if you did get in on this one early, or if you're just looking to add it now. What for you, Chris, when it comes to biotechs that have seen huge run-ups, can they still continue to run up just because they've missed the first 300% of gains? Is it still interesting to get in on the biotech?
To answer the question in the bulk of biotech, yeah, I think it's always going to be a potential. You always have to look and pay attention to, like the FDA timeline. You have to be looking at, how quickly they're going to be able to get that product going. Because some biotech is very differently. Also, I'm looking at is not a biotech.
Oh, I'm sorry.
It's a chemical company. It's in the chemicals industry. They're actually considered consumer discretionary. It's
I took away my minus sign on that one.
Alcohol-based products and specialty ingredients for industrial food, beverage, and personal care applications.
Yes.
Their core offering centers on ethanol. Oh, okay. I'm not familiar with the company. One thing I'd say about this, Bridget, for the people that are asking about it in super chat, the thing that would interest me right away is the fact that projected earnings growth.
I have to die for that.
So that's something. Especially when you consider the company has just started becoming profitable late last year. They've now had 3 consecutive quarters where they're profitable, and that's on both a GAAP and an adjusted EPS basis. And they're doing that when, as I'm looking at it, you're seeing a little bit of revenue growth year over year, but not a real strong growth. So that tells me that they're becoming more efficient in their operation and doing that. They've got some headwinds with potentially higher natural gas and electricity costs. They're going to have CapEx spend, but I don't think, obviously, that's not being held against them right now. So,
you thought you were going to get it.
Yeah, Lomo passed me and cut you.
Now that I'm looking at it looks like it's trading in a range and has been doing that since about the beginning of May.
I was singing that one song. I forget who sang it. Never gonna get it. Never gonna get it. Oh wow!
At the beginning of March, kind of gave a little bit of that.
That was a pretty good pickup right there.
But it's been trading in a range.
You're not on Tom Petty now, Tom Petty.
Estimates and analysts have a $10 consensus price right now. This is one that
Falling down is the hardest.
you're sizing your position well. This might be one that's worth taking a look at.
Very good. All right. I only have 2
Wow, ran away with it on this one.
And chats and other things that we could have gotten to today. was really quick. I don't think we have enough data on MarketBeat to really talk about one, which is HAPN. Somebody brought up as a super chat, and I think our data is really lacking on MarketBeat to be able to talk about this properly. I don't know if you have seen anything about it. Let us do a little looking, and if we can find something on it, we can talk about it next week. But right now, I'm just not sure that the information we have up on the website right now is enough. So we'll get back to that one another time. Chris, the last question we're going to end on. I'm not sure about it. Just but we can definitely look at the ETF chart.
Okay, this will be the last.
Okay.
Look at my fancy colors.
We get the revanche.
Alright. Well, tomorrow tell 47 I said hello.
Yeah, we'll do that. And you have to beat us now. This is final cap.
And we're charged a service fee providing the ETF on the Fidelity app. Is that normal? Again, that might be out of
I don't know. I don't have the ability to that. So
Watch loser log in right now.
Let's just take a look at the ETF because I appreciate that, and I know that you've enjoyed this many times. Let's cover the ETF a little bit. This is the memory ETF. I'm going to assume it's going to holding to be SP Hynix, Micron.
I love where
how did I miss all that?
You know, you've got
that's crazy.
Play the memory market is the way to do it without necessarily picking out one company. It's got SP Hynix in there. It's got Micron. It's got Seagate. It's got Western Digital. It's got SanDisk. It's got all of it. So this is one that you probably want to be investing in if you believe in the memory story over time. Certainly, yes.
Yeah, and I know we started the show out talking about this. There's so much demand
Weird.
here.
Sometimes it turns into a cloud of smoke, and sometimes it turns into pretty confetti.
Catalyst for potential move in the memory sector could be earnings.
Yeah.
Red
rain.
Show how much they're investing in the memory system, how much they're
Yeah, I would agree with that. I think you already
puff of smoke on
that
that one.
a little bit.
Confetti on the
end.
So mine turns into a puff of smoke this time.
I just was writing about it. Who was saying
a little puff of smoke.
Yeah, I haven't been thinking about that, but sometimes it's confetti and sometimes it's smoke.
I think you're going to see a lot of that.
I like the confetti.
See that, but again,
that's
all part of
yeah.
The water flushing on the bathtub and the people just moving from one sector to another. I think that's the interesting part.
Well, Chris, thank you so much for the time
But
today.
that has to be two different things. I think.
I don't know. So there's somebody's streamer right now. I don't know. Whoever just got cut that other time turned into confetti. Where two of us are just doing poops of smoke.
I do have to say, it is summer and I am taking a vacation next week, so we will not be here next week Monday, but we will be back the following week. Thank you all for joining us, and you have a great rest of the week. As always, happy
Yeah, see, I see confetti there. And then poop of smoke. Ooh, I'm live. Confetti! I guess long haul turns into confetti.
I like that red confetti. Again.
Good afternoon, everyone, and welcome to Stock Market Today for Monday, July 20th. It's Alyssa Corum here, and we started off the week with a fade. We'll put the action into context for everyone, and here with me now to do just that is my colleague, Justin Nielsen. Justin, what do you have for us today?
Yeah, I mean, we're going to try and focus on the positive. There's a lot of negative closes out there, a lot of things that closed at the low part of their ranges, including the indexes, which we'll cover in a moment. But a few bright spots. Let's take a look at Neurocrine Biosciences, NBIX is the ticker there, Rush Street Interactive, RSI, and then as our final stock, let's go with Burlington, BURL.
All right, it sounds like a plan. We'll do that, but first, a look at those major indexes. We're going to kick things off with the S&P 500 today. It's right at that 50-day moving average, but today closing below that level for two straight sessions here, Justin, and today at the lows of the day, reversing lower, down 0.2% by the end of the day. The NASDAQ closed almost flat, but slightly lower, but if you put that into context of how we started the day, definitely quite a notable fade as the session wore on. And then looking at blue chips, the Dow now 2 sessions below its 21-day moving average, and then the Russell 2000 now also below its 21-day line, still holding above the 50-day for now. So with the S&P 500 here, Justin, what stands out to you?
Well, my concern is actually with all of the indexes that you just showed, all of those charts, it's kind of your second day below a major moving average line. And what you don't want is for the indexes to get comfortable there, right? That kind of just tells you, hey, this is going to be a little bit more of a challenging market if you can't stay with those indexes. It already has been a challenging market. market, to be frank, with a lot of the leaders coming down as much as they have. And it's funny because when you look at the indexes themselves, you're like, well, gosh, it feels worse. The S&P 500 is only down like 2.5%, but it feels like it's
for me,
like
it
a correction at this point.
I saw smoke.
I mean, in order to get to like 8-9%, you'd have to come all the way down to probably like 640 on this chart. You know, lose basically all of the gains from this rally, and that would be your run-of-the-mill, 8 to 10% correction. So the indexes are not reflecting kind of the reality of what a lot of people are feeling in the leaders, especially those AI-driven data center power, all of those things. The microns, the SanDisk's, all of those that we've been talking about for so long. It is they're coming off quite a bit. And while we have been looking at some of these areas of rotation. Areas of rotation, I'll be honest with you, I wasn't that thrilled. I mean, XBI, that's not a good look. Another one where a reversal, and XLB that we covered on Friday as well. That had a reversal on Friday and fell further today. And that's despite a lot of the stocks in these areas looking very strong. The ETF's really kind of taking it on the chin. KIE, which is a little bit more on the defensive side. This is the insurance ETF. That was an inside day, nothing really to write home about. But let's look at RSP, which is the equal-weighted S&P 500. That closed lower and was basically trading lower the entire day. Right there at the 21-day moving average line, so I don't want to make too much of it. But at the same time, when you start seeing kind of nothing working, that is a cause for concern. Now, one area that we haven't watched that much, but I couldn't ignore the technical action here, is let's look at TVT. This is basically the 20-plus, the longer-term treasuries, the yield here, because this is short bonds, which is basically the same direction as yields.
Only one
position. So this kind of looked a little interesting in terms of this setup, and we can look at TNX, 10-year treasury yield as well. Kind of a similar situation there, where it just seems like it's
Okay, see you guys.
Double bottom with handles, anyone?
Right. That's not what we want to see. The yields going higher for bonds. So yeah, I think there's a lot of reasons to be, again, on the cautious side. That's one of the reasons why we lowered exposure. I think that's why we've been talking a lot more about